Hey everybody, welcome back. This is day number 15. Congratulations, you made it to the finish line of our 15-day personal finance overhaul program. Let's do a quick review and see where we've come together on our journey thus far. So we started out setting some pretty good goals for ourselves, some attainable, some really big, grandiose ideas. Hope you're keeping the focus on those. Number two, a little bit of self-evaluation. Know your current financial situation. Day three, we set up our record management system, our file system. Day number four, we started what you should still be doing, tracking in a notebook for at least the next 30 days, every penny coming in and out of your pocket. You need to know where your money's going. Day number five, we right-sized our insurance policy. We got to stay properly protected but without overpaying. Number six, prioritizing our savings and our investments. If you're not starting on retirement, you got to get that one done first. Great things need to be done in the proper order, in the proper hierarchy. Day number seven, master that credit report. Understand what people are watching about the way you handle your money and make sure that what's being reported favors you the most. Day number eight, locating sources of free money. And when you find that free money, treat it as actual money. Take it out of your pocket, put it in a box, put it in a bank, redirect those funds towards certain bills. Just act on it, but it's free money. Stop overspending for stuff you don't need or stop overpaying for the things you need. Get them at the best price. Number nine, let's take full advantage of the free money that employers give away when you save for your own retirement. Maximize that employer matching contribution. Day number 10, why we would want to select a Roth IRA or a Roth 401k over the traditional pre-tax or tax-deferred models. Number 11, understanding the terminology of the stock market. Number 12, methodologies to get out of multi-credit card debt. Number 13, mastering that home mortgage and understanding when it's time to rent, when it's time to buy, and the investment potential of being a property owner. And day number 14, you got to master those income taxes. There is no greater obstacle to your ability to generate wealth than to master the tax code. And day number 15, here we are. Let's get into today's topic. Life insurance and wills. All right, you've done a great job getting everything else set up. Now we got to worry about what happens if you're no longer here. So the reality is we have to talk about this topic. It's not a happy topic. No one ever wants to talk about life and death, but it's a reality, and we need to be as prepared for that as we are for retirement, as we are for paying for the kids' education, etc., etc., etc. It has a place in your financial roadmap. So let's talk about it. We're going to protect those who rely on your income. Life insurance, let's understand what it is. It replaces the wage earner. Okay? No amount of money mends a broken heart. So getting life insurance just because somebody dies doesn't make a hill of beans. But if people are depending on that paycheck, and if you're a married couple or a cohabitating couple and you're relying on both paychecks to survive, both of you need your share of life insurance. Okay? So remember, it's replacing the lost wages. We're going to recommend that you do a nice term insurance policy. Term insurance is just like your auto insurance. As long as you're paying, you're covered. If you stop paying, you're not covered. There are other forms of life insurance. They are seldom in your best financial interest. Whole life and universal policies are a big no-no. You might want to learn as much as you can about them before making an insurance decision. And then we want you to do this. Most employers offer some form of life insurance through your benefits package. Max it out, right? Take advantage of using this, what's called a group plan. You're getting low rates through your employer because they know that they're insuring thousands of people. And bundled in there are the rates that take into account those who are a more of a medical risk over those who are very healthy. But you definitely want to use that group plan if you're obese, if you're a smoker, if you have any health issues or pre-existing conditions that may cause your insurance on the free market to be a little bit more expensive, and in some cases, a lot more expensive. So the problem here is that those plans are not good enough. Like your paycheck, your benefits are tied to you having that job. What happens if you lose that job? How long will it take you once your job is eliminated, or you get fired, or you get laid off, or your company closes due to COVID-19? How long is it going to take you to get a new insurance policy? You're going to call up, you're going to ask for a policy, you're going to shop around, they're going to send somebody to your house to draw blood, they're going to weigh you, they're going to measure your body mass index, they're going to do a medical pre-screen, and then they'll decide if they're going to offer you a policy and how much that policy is going to cost. Meanwhile, you are exposing your family to a tremendous financial risk, because if you pass away without insurance, it's going to be ugly. And you can't do that to them, and you wouldn't want your spouse to do that to you. So you've got to make sure that you're working on getting an insurance policy now while you can, and not being beholden to your employer. And then when that policy plan is decided upon, you need to think about how you're going to process the insurance policy the day that you pass away. And my advice to you is to never, ever do the lump sum payout. Do not let people take the lump sum. And we'll talk about the plan for that in a second. And we need you to plan on insuring yourself for about 8 to 10 times your income. And we'll explain where that number comes from in just a few seconds. And if you're out on the market, if you're a relatively healthy person, your body mass is proper, your health is good, you exercise, you don't smoke, you don't do any drugs, you can go out and possibly find cheaper insurance on your own, in addition to the insurance that is offered through your employer. So here's what we need to do. I said don't ever take a lump sum, and this is why. 70% of the people who get lump sum money, whether it is a lottery winner, whether it is pro athletes, and when they stop playing, they're usually bankrupt and penniless in 3 to 5 years. Right? Winning the lottery could be one of the worst things that ever happens to you. And people laugh at that and go, oh, well, it wouldn't happen to me. Well, it happens to 70% of the people who get a large payout, because they go out and they don't just pay their bills. They enter into a new lifestyle that is unsustainable, and they lose it quickly, and they end up actually worse off than where they started. We don't want that to happen to you. It's bad enough we had broken hearts when someone passed away. Let's make sure that the financial impact is remediated properly. And for that, what we're going to do is we're going to get with a financial planner, and we're going to set up a trust that says, I need to have enough life insurance so that when the lump sum check is written to my beneficiaries, you can invest that amount of money in a reasonable amount of return, expected return, and the money that grows from that account will replace my income. Right? Now think about this. If you make $50,000 a year, you don't want a $50,000 life insurance policy. That means you're only protecting your family for 1 year. That's not good enough. You need to generate enough money that every year they get $50,000. And that tends to be about 8 to 10 times your salary. 8 to 10 times your salary invested in a nice, solid um, investment plan should be able to replace your income. Use a professional advisor to create this trust and understand that the trust is completely flexible. And I'll give you an example. It says, consider the length of the trust based on age and circumstances of your beneficiaries. So, for example, if you're a young couple and you're in your 20s and something terrible happens to you, there's a very good chance, although you can't think of it now because you're thinking about the heartbreak, et cetera, there's a very good chance that your spouse will remarry at some point in the future, at least probably within 5 to 10 years for sure. You could set up the trust that for the next 5 or 10 years, it works exactly as the way I just described it. All of your insurance proceeds went into the trust is invested, the investments replace your monthly income. And then 10 years from now, your spouse is going to be with someone else, and that someone else will be providing some form of financial assistance, some financial input. There's no need for your paycheck to keep coming every month. So maybe you can keep that system running for about 10 years, and then at the end of 10 years, distribute it evenly to your kids, to Uncle Joe, to whoever. Okay? It's just, there's too many variables to go into it, but please understand that a trust is completely and utterly flexible, and you can set it up to work any way like that. We just don't want the lump sum payout because you don't want your family to be bankrupt and then they're in a hard spot financially. Okay, talk to a financial advisor, run that by them, get it lined up ahead of time. The next thing, creating your wills. Listen, if you die intestate, which means you don't have a written will, the government has a will for you, and I guarantee you don't want it, right? Let's make sure that we understand the laws change state by state. You want to be the one that decides where your possessions go, where your money goes. You also want to make sure that you're understanding who's going to raise your children if there's children involved. Okay? Now, the good news is that your inheritance taxes are actually very generous. Unless you have more than $5.5 million, there's not going to be any tax at the federal government level. But different states have different estate taxes, and you need to know what your taxes are, and that changes state by state. So I want you to consult an estate attorney and learn about your options, and I need you to understand there is more than just your will. Okay? There's more than just when I'm gone, here's who gets my motorcycle, right? What happens if you are in an accident and you're in a coma? Who can make financial decisions on your behalf? Who can sign the check and make sure the house payment still gets paid on time, right? Who can make the medical decisions that decide what happens to you when you are incapacitated and no longer in a condition to choose for yourself? So there is more than just your will as we go through this exercise. Okay, there are different scenarios that you need to be protected for. What happens if both you and your spouse are lost and or incapacitated? What happens if you are the new nuclear family where you have children from a previous marriage, she has children from a previous marriage, you want your money to go to your kids a certain way, she wants what she brought into the marriage to go to her kids in a particular way. All of this needs to be written out. Please use an attorney, an estate attorney, to understand what your options are and all of the different forms that you need. This will not be cheap, by the way. I'm going to let you know that right now. You could try to do some of this stuff on a free site like LegalZoom.com and do it on the cheap. But you need to understand how many different forms you need, what situations you're trying to protect yourself against, and you will certainly need to pay for at least an hour or two of consulting with a decent estate attorney. My advice to you, if you don't know this stuff, pay the fee. Suck it up and pay the fees to make sure that your family and your loved ones are properly protected. Now, no amount of money mends a broken heart. But the good news is when you get your proceeds from either a lawsuit or a insurance payout, did you know that they are completely income tax free? Well, they are. So beneficiaries do not pay taxes on your inherited money or insurance proceeds. The only thing that beneficiaries do pay taxes on is if they inherit your retirement plan and your retirement plan has pre-taxed or tax-deferred dollars like a traditional IRA or a traditional 401k. So if you've been putting your money into a Roth, it's a non-issue. But if you've been putting your money into a tax-deferred plan, then they're going to owe income tax on those proceeds unless they roll them over and defer them once again. Remember, I said defer, I did not say avoid. You're not going to ever get this money tax-free, but you can defer those taxes until you really need the money so you can roll these funds that you inherit over into your own pre-tax, tax-deferred IRA, and then you'll just pay taxes when the money comes out. Okay, so let's review because this was a lot to take in. This is some heavy duty stuff, by the way. I hope you're willing to work on it because believe me, I know horror stories of people who are not properly protected and their families were left really in a bad way. So here's your to-do list for day number 15, life insurance and wills. Identify the impact of what would happen if you were no longer around. Who is impacted by your loss of revenue to the home? And remember, especially like here's a great example. If you are a single child, an only child, your parents may be in great health today, but they're going to get older and they're going to need care. And you were supposed to be the one who was around to take care of them. You need to provide for that in your life insurance plan. Okay, so consider all forms of impact of you no longer being around and think about all the ways that you're financially connected to needs and obligations across a broad spectrum of circumstances. Insure yourself for enough to invest it at a reasonable rate of return so that they can replace your income on a regular basis. Get that monthly check, replace that paycheck. Use a variety of wills and powers of attorney to protect yourself against being incapacitated or taken from us permanently. Knowing that life insurance is tax-free, you may want to consider life insurance in part of your long-term financial plan. If your goal is to amass wealth that you will one day leave to your children, you may want to just provide for them through a nice, affordable insurance plan, and you use your money to live and experience life. Everybody wins. You live your life to the fullest. They get to inherit money tax-free. What's not to like? Not a bad price to pay for a small term insurance policy. Use term instead of whole life or universal. Again, talk to a professional financial planner. Do not call your insurance guy. He's a sales guy. He's going to sell you the biggest commission, and the biggest rip-offs out there are whole life and universal. They used to joke, they used to say whole life is the hole where all your money goes. You never get it back, right? Consider term insurance, especially while you're young, and you can lock in long-term rates while you're healthy. Be very, very surprised how cheap an insurance policy can be when you're young and healthy. All right, get your coverage within your employer's plan as well as outside your employer's plan to make sure that you're protected should that job not be around while you still are. Okay, lots of things to consider, really heavy duty stuff. Everyone, thank you so much for listening in on this program. Remember, I do this just out of the goodness of my heart. There's a saying that I heard once. It stuck with me for years. It says, if you know the way, be a guide to others. Okay, and that's all I've done in this program. I've taken some advice that I've known and I've learned and I've cultivated. Sometimes I learned the hard way, and I'm trying to make these videos, offer them for free on YouTube, and just help other people out. I hope these 15 days that we spent together are valuable to you. Go make the best of your life. Remember, you owe it to yourself. You live in the greatest land of opportunity mankind has ever known. Live your life to the fullest. That means good, sound financial principles. Get out there and do it. There will be no change to your current situation without action on your part. Thanks so much for watching. Bye-bye.